What's going on, everybody? This is Dr. Kenyon Hackworth from Healthy You, Wealthy You, where my focus is on improving health and building generational wealth. So today I'm back again with another video from the Tao of Warren Buffett. If you have not subscribed yet, please make sure to hit that subscribe button. So we're going to get into it. It's number 27. If a business does well, the stock eventually follows. A market phenomenon that Warren relies on is that if the underlying business does well over a long period of time, the stock price will increase to reflect the underlying increase in the value of the company. Likewise, if the underlying business does not do well over a long period of time, the stock price would decrease to better reflect the underlying value of the company. The long-term value of the company has a way of rectifying the situation, no matter which direction. Thus, internet stocks that saw their prices soar skywards during the bull market saw them drop like a rock when they failed to make any money over the long run. Likewise, great companies that saw their stock prices plummet and the stock market crash saw them immediately recover once the market saw that their earning power had remained intact. If you buy a stock that has had its price beaten down, you better make sure that the long-term economics of the business are still good. If they are, and the business does well over the long term, so will the stock. For the stock price to improve, the business must do well. And to do well, it helps immensely if it was a great business to begin with. So the most important thing, you have to realize that when you're buying a stock, what you're doing, and I will say this 1,000 times, you're buying a piece of a business. So what's really important is the long-term economics of the business. I never buy a stock based on what I think the stock is going to do over a short term. I'm looking for businesses that are fundamentally sound, that have great long-term economics that you can buy and own for a long, long time. You know, these same businesses can be passed down to your children, to your grandchildren, and because of their earning power, their continued earning power, you can continue to have your wealth continue to grow year after year, decade after decade for a very, very long time. So now, right now, there's a lot going on with the stock market. A lot of prices are down, but what's important always is still, it's not the stock price. It is the business. How is the business doing? How has the business been doing? What are the underlying fundamentals of that business? Is that business making any money? Does it have earnings? Does it have cash flow? Does it have revenue? Those are all important questions you need to ask when you're buying a stock. See, the reason why I don't have to sell anything that I bought last year is because I took the time to look at the fundamental the fundamentals of the businesses that I bought. So stock prices going down does not cause me to panic and sell because I know that I own great businesses. Now, if you bought some stocks that were hot and they kind of fizzled out and went down, you know, there's a difference between owning a hot stock and a great business. So learn to look for great businesses, ones that you can buy, ones that you can own, and that's what's important. Warren Buffett always says that in the short term, the stock market is a voting machine. In the long term, it is a weighing machine because the scales will always balance out in the long term. If the stock price runs up and the business is not doing well, then over time, that stock price has to come down to match the business. If like right now, when there's a lot of stock prices or businesses that may be quote unquote oversold and the stock prices go down, but the business still does well, then over time, the stock price will rise to reflect the long-term economics of the business. So look for great business. Learn how to find great businesses. Everybody wants to know what stock to buy, but nobody really takes the time to look at the actual fundamentals of understanding how to invest. That's what's important. Look for long-term businesses. And that's what's important. You allow your money to compound by buying great businesses and owning them for a long time. That is the best way. That is the key to build wealth over the long term. It's not trading in and out of stocks. It's not looking for the hot stock at the moment so the price runs up, you can sell it and then find something else to put your money into. If you're right about a business and it's a really great business, you can own that business for 20 or 30 years and your and your money will continue to compound for a very long time. So understand, if the business does well, the stock will eventually follow. So look for great businesses, even in this market when things are somewhat beat up. Look for great businesses that you can buy, because there are a lot of them right now that you can buy, that you can own for a long, long time. All right? Look for great businesses. Buy, hold, and prosper. Talk to you soon.